All right, let's just dive right into this. If you've ever looked at international organizations and wondered how the taxes actually work behind the scenes, well, you're absolutely in the right place. Today's explainer is a legal reality check. We're basing this entirely on a fantastic technical legal report by Dr. Francisco Di Tommaso over at F.D.T. Consulting, and trust me, it is going to clear up a lot of misconceptions.
So, I want you to imagine your absolute dream scenario for a second. You've just landed this prestigious contract with a United Nations agency based in beautiful Italy. You're packing your bags, you're already tasting the espresso, and maybe best of all, you're anticipating a totally tax-free payday. I mean, it's common knowledge, right? UN workers just don't pay taxes? Well, you might want to hold that thought.
Yeah, not so fast. I kind of hate to be the bearer of bad news here, or I guess more like the bouncer at the door of this exclusive club, but that tax exemption, it is definitely not automatic. Just because you're doing work for the UN doesn't mean the Italian tax authorities are just going to look the other way. As this F.D.T. consulting report makes crystal clear, it depends entirely on your specific legal title. The details matter, and the law is incredibly specific.
To unpack all this, we're going to hit 5 key stops today. First, the UN tax exemption myth. Then, Section 18, the VIP list. After that, Section 19, the actual perks. Next, officials versus consultants. And finally, the progressivity clause catch. So let's kick things off with part 1, the UN tax exemption myth, and get a bit of a reality check.
Now, the myth isn't that the exemption doesn't exist at all. It definitely does. The myth is really about how broadly it applies. You see, these tax perks aren't handed out as some sort of personal reward. The entire rationale, the whole reason they exist, is strictly to guarantee the independence of the international organization. It ensures UN civil servants can just do their jobs without interference from the internal laws of member states. Italy actually signed on to this via Law No. 1318, way back in 1957, and Article 10 of the Italian Constitution actually gives these international treaties power over ordinary domestic laws, so it's a huge deal.
And that brings us straight to the core text we're dissecting today, Article 6, Section 18 of the Convention on the Privileges and Immunities of Specialized Institutions. This is the exact provision requiring each UN institution to independently identify the specific categories of officials who actually get these treaty privileges. I really want you to focus on that word identify. The organization itself has to determine the categories, communicate them to the states, and periodically transmit the specific names to the governments.
Which brings us right into part 2, Section 18, or as we like to call it, the VIP list. Who actually gets the perks?
So when you're dealing with the Italian tax administration, Section 18 functions exactly like a nightclub VIP list. It's strictly procedural, meaning Section 18 itself gives you absolutely zero tax breaks, none whatsoever. It's purely an organizational guest list identifying the names that get periodically transmitted to governments. Its only job is to point out the specific people who will subsequently benefit from the immunities found later in the convention.
Moving right along to Part 3, Section 19, the actual perks and tax benefits.
All right, now this is where the magic actually happens. The crucial point to understand is this contrast right here. On side A, you've got Section 18, the VIP list. That identifies who can benefit. But on side B, you have Section 19, the VIP perks. This establishes what privileges actually apply to the people on that list. Specifically, the exemption from national taxes on UN salaries, which in Italy means you're exempt from ERPF, their personal income tax. Basically, you absolutely have to be on the list in Section 18 to get the perks in Section 19.
Let's look at Part 4, Officials versus Consultants. Why your status absolutely matters.
Now, this distinction is arguably the single most critical thing in all of Italian jurisprudence regarding UN workers. And honestly, it's where that dream scenario we talked about earlier often hits a brick wall. On one side, you have international officials. They are formally identified under Section 18, they enjoy the treaty privileges, and their UN salaries are entirely exempt from IRPF. But on the flip side, you have consultants and occasional collaborators. They provide professional consultancy, sure, but they do not assume the legal status of an official. Because of that, their fees remain fully taxable under standard Italian tax legislation. Literally, just doing the work means nothing if your contract formally defines you as a consultant.
And well, while we're bursting bubbles today, we need to look at what the exemption never covers. Because even if you are a formally recognized international official on that VIP list, the Italian tax authorities are still going to want to hear from you. The exemption strictly applies to the salary paid by the organization, period. It does not automatically extend to any real estate income you might have in Italy, your financial income, any private professional activities, business income, or capital gains. If you've got other income, whether it's produced in Italy or abroad, your obligation to declare it remains fully intact under national law. No exceptions.
Which perfectly tees up Part 5, the Progressivity Clause catch, the hidden catch.
Okay, this is a truly fascinating but very often overlooked caveat in international tax law, and it can seriously blindside UN officials when tax season rolls around. Here's exactly how it works. Step 1. As promised, your UN-exempt income is not taxed directly. Awesome, right? But wait for Step 2. That exempt income is added to your other income to calculate your overall average tax rate bracket. Which brings us to Step 3. Because your UN salary just pushed you into a much higher tax bracket, that newly inflated rate is then applied to your other taxable Italian income. You know, like that real estate or financial income we were just talking about. It essentially acts like a hidden trapdoor, silently jacking up the tax bill on your non-UN earnings. The report notes this always has to be verified case by case based on the specific convention, but man, it is a massive detail you just cannot ignore.
So, to bring this all together, let's look at the professional conclusion straight from Dr. Francesco Di Tommaso's report. He states, the correct application of the tax exemption always presupposes the preliminary verification of the qualification held by the person concerned pursuant to Section 18. Simply put, it all comes back to the VIP list. Only after that legal title is verified can you even begin to assess if you actually get the Section 19 tax exemptions, and then figure out how to correctly file your Italian tax declaration, progressivity clause, and all the rest of the shebang.
As we've seen today, working for an international organization is undeniably an incredible opportunity. But the legal reality in Italy is governed by strict, specific treaty language, not just the fancy logo on the building you walk into every morning. It's not about the work you do, it's entirely about the legal qualification you hold. So whether you're currently working for a UN agency right now or you're hoping to land that dream gig in the future, I gotta leave you with one vital question to think about. What exactly does your contract say? Are you really on the VIP list?